Thank you very much. I will attempt to leave a few minutes for questions at the end, but we'll see how we get on with the timing. About me. So I am the CTO for Experian Consumer Services. So what does that mean? So you'll, I'm sure, be familiar with Experian. We're a very large global financial services and technology business. We're basically split into B2B services. Like if you are a lender, financial institution, you will, in the majority of cases, be a client of Experian if you do anything related to credit scoring. But then there's also the consumer side of it, which is the things that get put into people's hands. You as UK citizens will potentially, many of you in the room will have the Experian app. You have a credit score. You can go and check your credit reports. And I heard a very clear call to action from Helen earlier saying that credit scoring needs to change, which I felt like her eyes were burning a hole in through my head when she was saying it. And actually, you know, that is something that I will touch upon in a bit. And you may have heard that we've in the last week we had a big announcement about how we are actually changing our credit score. But I'll come back to that. But first of all, yeah, I decided to include some Lego pictures. GenAI produced Lego pictures for no reason other than I saw somebody else do it and I thought it was cool. But then it started producing things like pictures, you know, an image of me with no legs, which I decided to just use it because what the hell. My background is in building fintechs, scale-ups, many of which have touched upon this issue of financial inclusion, trying to open up the access to financial products for consumers. I've also worked in a number of different industries such as education and legal, and I've spent some time working for a big tech company. Okay, did somebody boo then? Okay, so why financial inclusion? What do we mean by it? Well, there's actually no one accepted definition of financial inclusion. The government did just a couple of weeks ago, in fact, publish a financial inclusion strategy. So if you're really interested in what they had to say about it, it's worth a read. It is pretty comprehensive. The FCA doesn't actually have a framework for enforcing it in financial institutions, but the consumer, you may have heard of consumer duty. So those rules were introduced a couple of years ago, and they required FCA-regulated companies to put good consumer outcomes at the heart of their decision making. But I think it's worth sort of understanding financial inclusion in the context of what exclusion looks like, if you know what I mean. And so some ideas up there, but it's people that don't have access in the way that perhaps you or I might have access to financial products and services. There may be barriers that relate to literacy, numeracy, financial capability, their education. And we heard earlier about the growing issue of an aging population, and as many of you will know, with your, you know, if you have elderly relatives, they are often not savvy in using financial products, and people that for whatever reason just don't have the tools or the wherewithal to effectively plan or manage their finances. So I think that those are the sorts of things that I want to look at today and have a bit of a romp through some of the ideas in which that are out there in how AI and technology can actually lead to better outcomes for people in terms of financial inclusion. There is a general consensus that technology is going to be key. So I was at a roundtable with a bunch of technology leaders from around the financial services institution the other week, and there was this overwhelming agreement that whatever your opinion on a lot of these things is, technology will be one of the things that really helps us to address some of these structural problems. Okay, so I'm just going to go through some different sort of elements of what financial inclusion can look like and be, and how GenAI in particular may help. A lot of these things are actually happening. some of them inside experience, some of the things we're actively exploring, but also just people I'm speaking to and things I'm hearing, things I'm seeing in the media around how different companies are addressing this issue. I put explaining into ChatGPT, and it came up with something which probably looks more like mansplaining. A good example of this is I've seen, for example, I think it was Compare the Market at the last one of these events where they were using GenAI to explain in plain English what different products on their marketplace meant. So different terms and different APRs and things like that. So I thought that was a really interesting example. Perhaps English isn't your first language. Well, if there's complex financial information being presented, why wouldn't you use GenAI to provide real-time translation of that? Also, just maybe adjusting to people's literacy level or giving people options around how simple you want to have a product translated into. And one of the things that we're really exploring is much more interactivity with content. So rather than it just being, here's an explanation of a product, or here's some information on a product. We are actively exploring ways in which you can talk with that content. You can have a conversation with that content, if you like, to understand more about it. And if maybe a financial product is presented to you, you can actually ask questions about that financial product through a chat interface, for example. And that's just one idea. Coaching. I think it was mentioned. One of the speakers mentioned it before me. We are seeing the rise of what we would call smart PFMs, personal finance managers. These are tools that really help people to improve their literacy around finances that are specific to their data. So, with a PFM, for example, you connect your open banking, you connect your bank account through open banking connections, and then the smart PFMs are using GenAI to interpret that data and allow you to interact with it. We're seeing the rise of a lot of future wealth planning tools as well. So there's a couple of examples here that have been rising in popularity. Clio and Ada from Money Means, I think they're called. Clio has proven very popular. Now, I don't know how your eyesight is, but what these have really tried to popularize is the idea of giving it a bit of a personality. So it's quite well known for being a bit sassy in how Clio is at least, being a bit sassy in how it interacts with you, and often gamifying for your financial goals, and then adjusting to your preferences and what it's learning about how you actually have interacted with it previously. I think we'll see the rise of a lot of those, and I think you'll see those far more integrated into other financial services and financial products. You'll start to see it into your bank, appearing in your bank account app, for example, and they will be getting more personalized and more sort of feel like trying to present themselves as your financial friend, if you like, rather than it being a dry chatbot of the past. Advising. Now, this is a big topic. So, if you see some of the stats there, 40% of Brits are turning to AI tools for financial advice. Now, what we are seeing here is that, interestingly, while people are increasingly using tools like ChatGPT to help to get actual financial advice, OpenAI, for example, have announced that they're pulling back from that. Just a couple of weeks ago, they said that they were, I think it says there, it's pulling back from giving medical, legal, or financial advice because they're concerned about being sued. And this is a very real concern in the industry because financial advice is a very specific thing. So advice I probably don't need to tell most people in the room, but advice from an English point of view is you can get advice from your mates on which credit card they have. But financial advice in the context of the industry and the regulated industry is a very specific thing. You need a very specific license for, and there are very strict criteria around that. And GenAI has an alarming propensity to stray into to things that are very much financial advice, even if you've told it not to when you've been training it. And as we all know, they are very good at hallucinating stuff. So giving financial advice not only is in many places breaking what we have licenses to do as a financial institution, but is also just talking crap to people, basically. The FCA, they're the ones that regulate us for these kinds of things. They on one hand they are very conservative. That's their job. On the other hand, they are talking quite a good game around how they see financial AI and technology improving access, but also they have signaled that they are actually open to the idea that AI could be used to deliver financial advice. And you see that they actually announced a partnership with a company called Anitech a few weeks ago. Again, because that's part of what they've called their Supercharged Sandbox initiative, which is like they basically they're making an NVIDIA cluster available to financial institutions in the UK if you kind of register and put in a pitch for some time on it. And this is part of their strategy of saying, like, we do believe there is a future for this. It's not now. It's not like today. Don't go giving financial advice through GenAI today, but they're signalling to the market that they are open to it, which I think is an interesting thing. And I think our regulators do get quite a lot of kind of blowback and a lot of criticism. But I think in recent times, I've actually been feeling quite positive about the way the FCA is, kind of the mood music that the FCA is putting out there. Just one on the bottom left there, because I think that's relevant. This was a company that I must confess I co-founded, but they did this after I'd moved on, which is that they're a mortgage data company called Kudu, and they actually created an GenAI-based tool which passes the mortgage advice exam. Now they did not and are not exposing that directly to consumers. But what they have done is that they have used it as part of a human-in-the-loop process. So it's actually working with their mortgage advisors to sanity check what they're saying, to help them give better answers. And it's kind of a little co-pilot for the mortgage advisor, because they're the ones who are accountable for the advice given, rather than being exposed directly to the end user. So I think we'll see a lot more of that as a bridging step towards true AI-powered financial advice. Okay, so this was something that came up before. I was personally challenged to come up with better credit scoring. So at the moment, there's quite a few moves being made to open up, to go beyond the traditional credit scoring model, which is basically where anybody that you've had a financial product with, a credit product with, is obliged to report back to one of the big bureaus, of which Experian is one, and it's basically a record of how you have managed your credit in the past, and that is as a guide to the future. There is a widespread recognition amongst the industry, including in Experian, that people have much more nuanced and complex finances than that, and just how somebody has behaved with credit in the past, if they have even had credit in the past, is not necessarily an indication of what they can afford to do now or what they're likely to do now. So it doesn't work for what we call thin files, people that just not had credit, people who are new to the country. You know, you'll often hear a lot of people complaining that they, manage their credit perfectly in the past in their home country, and then they move to the UK, and that doesn't, then they can't get credit here. We heard from Helen earlier saying that, being self-employed, and even though she's been kind of working for years and paying into the system for years, she's seen by the bureaus as being a high risk. So there's already moves, and this is not necessarily a GenAI solution or answer here. It's more of a kind of classic ML/AI problem, is using consolidating the data that you provide as a consumer back into the system to augment your traditional credit file with affordability data. Basically, how you are currently managing your finances today. It brings in data such as your evidence on your earnings, particularly if you are you have variable earnings, and can bring in sources such as your spending data and subscriptions and that kind of thing. Experian actually a few years ago launched something called Boost, which was actually very, very popular, and I think there's a future where this gets smarter, which is where we use open banking data and AI to enhance your credit score. It gives the lenders, it gives you a little boost to your credit score because the lenders see that and they see that you've shared that data. So we actually, as I mentioned earlier, we actually just have changed the way we do our scoring. We've added far more data points in. If you're used to seeing your Experian score go from up to 999, it now goes up to 1250. Everyone will get that in the next few weeks. And that's really because we are adding more and more of these data sources in, but there is a future that is coming very fast where there'll be lots more data points brought in. And I've also seen the company that I know the founder of in the US, who's doing some really interesting stuff about embedding data collection into the financial networks, which then becomes, so rather than people having to go and view their credit file in the traditional way or submit data through open banking, it augments those traditional credit files with data that is collected and shared through a trust layer. And then there's an AI engine that powers that. And I think there's a really interesting network effect opportunity there that comes off the back of that. This is a slide with no picture, so you know it's serious. I think this is one of the most important things that we can do in terms of improving financial inclusion. Is I think we can truly get to a stage now with the tools that we have to move to true, what we would call N=1 hyper-personalization. By N=1, it means it is designed for you and you specifically. Rather than thinking of you as a segment, thinking of you as a bucket of people, we take your data, we take your preferences, we take your behaviors, your preferred style of consuming content, and we deliver financial information to you where you want it and how you want it. And it's what makes sense for you. Then behaviors could be historical behaviors, they can be real-time behaviors. This is an example of that would be content that's copywritten specifically for you in your specific circumstances. It could adjust to your tone of voice, to your literacy level, and think about something like video and audio. Like, why wouldn't you deliver something that was like a video presentation to somebody, personalized with their specific financial information, or if somebody was visually impaired, why wouldn't you use like an audio style of delivery? Maybe people have seen examples of AI being used to create like podcasts that just feel really natural in their style. Notebook LM is one example of that. If you haven't seen it, try it. It's fascinating. But why wouldn't we take someone's personal financial data and deliver them content that feels natural to them and is delivered in that sort of style that works for them? One thing that goes hand in hand with that is targeting. Now, it's not just about us being like more ruthless marketers with our message. I think that seeing the messages that matter to you the most, like the right message at the right time on the right channel, I think that that's how targeting can really try to start to improve outcomes for people. You know, we alert people, for example, to trends and activity on their credit report. We alert people to potential fraud on their credit report. So ML-driven targeting is obviously not new. This is what, you know, big tech has been founded on in many ways. Social media has been founded on, but an opportunity to do that in a way that is more relevant and feels less intrusive. I think that's the opportunity that the GenAI and AI-powered targeting gives us. I think more generally, I think it accelerates access to information. I think AI can kind of go beyond the classic chatbot now and have content that really knows about your preferences. It really understands what you want to access quicker. So we, for example, have started exploring voice agents that you can actually interact with. Now, there's a bit of an uncanny valley kind of aspect to that at the moment, which I've had that. I think it's Booking.com. I was talking to an agent for a couple of minutes before I realised it was GenAI, but it felt a bit weird. But this is something that I got the answers that I actually wanted, and this is something that I think we're going to see a lot more of in contact centres. And this is something we're actively exploring, whether it's through interactive IVRs or whether it's through an actual voice agent that you can talk to. But again, supporting our human agents, giving our people in the service centres access to those tools is one of the things that is proving to be very rewarding at the moment for us. We hear a lot about agentic AI. We say that we're going sort of from show me to tell me to do it for me. Things like micro saving and investing outcomes, finding benefits and grants that you qualify, optimizing your debts and outgoings. And these are the sorts of things that agents are being touted as being the solution to. And we heard again a call to action earlier around preventing harms to people. And it is, of course, an arms race with AI. Many of the tools, AI-powered tools, are delivering increasingly sophisticated threats, but we are having to get increasingly sophisticated in return. Starling Bank, I thought I had a slide there. Starling Bank recently launched a partnership with a product called Scam Intelligence, which is using GenAI to look out for activity that looks suspiciously like a scam on your account. And I think being able to adjust to people's individual support needs and vulnerabilities is another big opportunity. This is my last slide, last two slides, in fact. But there is a wild west out there. I think there is one example of rapid change here is that ChatGPT's app marketplace, which was opened up in the last few weeks, has given companies the ability to actually plug their apps directly into the ChatGPT window. And so when we say things like, you saw the stats earlier about how people are using ChatGPT to get financial advice, there is a big opportunity potentially for us to partner with those with the AI companies and deliver more relevant experiences from people in this room who understand, who work in the finance industry, to deliver outcomes that are better if people are going through those channels. Rather than just pretending it's not happening, let's find ways of working with that and see it as an opportunity rather than a threat. But it is the Wild West, and I think we need to all be sheriffs here. So that's it. There's obviously many reasons to be cautious. I won't talk through those. You can read them. But I was trying to present more of a positive view on where GenAI could take us. Many reasons for us to cool our boots and take a really cautious and careful approach to this. And I'm sorry I did not leave any time for questions. But thank you.